Welcome back, everyone. Today, we're focusing on 5 major players from the Magnificent Seven, and also my personal watch list. We'll kick things off with the latest news, then unpack what it actually means for your investments. Let's get into it. AMD got slammed, down over 6% yesterday, after the US slapped new export controls on its MI 308 GPUs headed for China. On top of that, AMD is booking an $800 million charge tied to this move. And the pain didn't stop there. ASML's weak earnings sent shockwaves through the entire semiconductor sector. Amplifying the drop, NVIDIA? Same storm, just a bigger boat. It fell 7% after a massive $5.5 billion write-down related to China export bans on its H20 AI chips. That alone dragged the Nasdaq down 2.23%. Tech stocks were getting hit hard, and chip makers were leading the charge downhill. Tesla slipped another 2.5%, this time it's tariffs again. Trump's proposed levies are threatening its cybercab and semi-production, and now the EU is hinting at penalties too. Tesla is down 31% year to date. Still, it saw a 10% bounce last week when tariff worries eased, so there's volatility to watch. Meta managed to keep things together. It was only down 2% during yesterday's sell-off. Not bad, considering the tech bloodbath. It's still riding strong on AI-driven ad platforms and continued metaverse development. And finally, Coinbase. It had a wild ride, up 19% last week, thanks to a crypto rally when Trump paused some tariffs. That lifted crypto sentiment overall. MicroStrategy even jumped 23%. But on March 31st, Coinbase dipped 4% in pre-market, classic crypto volatility. Let's unpack all this. Starting with AMD and NVIDIA, tariffs are clearly the pain point here. Cutting off access to China's market is like closing down your busiest, most profitable store. AMD losing that channel hurts, but remember, they're still growing in AI data centers, and that's a long-term play. I think the market's overreacting here. Same goes for NVIDIA. This company isn't going anywhere. Their dominance in AI chips is unmatched, and even with China out of the picture, demand from robotics, enterprise AI, and cloud providers is still accelerating. The $5.5 billion write-down stings, but let's be real, it's not a death sentence. If you're holding these names, don't panic sell. These are premium stocks with long-term upside. In fact, I'd look at this weakness in AMD as a buying opportunity, not all in. But a small nibble here could pay off down the line. Just make sure you're balancing the risk. Pair it with something more tariff immune like Costco, which has nothing to do with China chips but continues to deliver. Now let's talk Tesla. This one's more complicated. Tariffs directly hit their production plans, especially for the semi and the cybercab. And with the EU stepping in, things might get worse. Before they get better, add in Elon's recent political antics, and it's clear investor confidence is shaky. That said, Tesla's still an EV leader. The 10% bump last week shows there's hope when external pressure eases. But with a 31% drop YTD, it's a risky play. If you're invested, dollar cost averaging could make sense. Add small amounts monthly to ride out the noise, but don't let this become the core of your portfolio. Tesla's a long-term story, but it's a rocky one. Meta is actually showing some resilience. A 2% drop in a tech meltdown? That's nothing. Their AI-powered ad platforms are performing well, and while the metaverse buzz isn't what it used to be, Meta is still quietly innovating. You're not seeing massive volatility because Meta isn't as exposed to tariffs. It's more about data, software, and attention, not hardware exports. For me, Meta is the defensive tech pick right now. It's benefiting from AI, but without all the tariff drama. Solid cash flow, strong user base, and less geopolitical heat. It's a good stabilizer if you're already heavy in the semiconductor or EV space. Last up, Coinbase. When Trump paused tariffs last week, crypto lit up, Bitcoin spiked, sentiment flipped bullish, and Coinbase rode the wave. But remember, crypto is still a roller coaster. The 4% dip on March 31st reminds us this sector can swing fast, both ways. Coinbase is a high-risk, high-reward play. If you're bullish on crypto long-term, it's a great way to get exposure beyond just holding coins. but size your position carefully. This isn't something you want to overload on, especially in a year filled with election noise, regulatory moves, and volatility spikes. So here's the bottom line. AMD and NVIDIA, short-term pain, long-term potential. These dips might be buying opportunities, especially if you believe in the AI future. Tesla, tread carefully. Great company, messy moment. Dollar cost average if you're in, but don't go all in right now. Meta, solid and stable. Good AI upside without the geopolitical risk. Coinbase. Big swings, big potential. Just don't let crypto's volatility wreck your broader strategy. Keep your cool. These kinds of pullbacks create chances, but only if you stay level-headed and play the long game. If you found this helpful, hit that like button and subscribe for more grounded market breakdowns. Let me know in the comments. Are you buying the chip dip or staying out for now? Thanks for watching. I'll see you in the next one.